Welcome, Mark Dupuy from Simple Acquisitions here again, and today we're going to explore the last investment type in the limited category, U.S. Treasury bonds and notes. These are often called Treasuries for short. These are identical to the Treasury bills defined in the low risk category above, except that they are sold at auction. This means that they can be bought for more or less than the face value, depending on demand. For example, when demand is high, bidders will pay more than the face value. Bidders know Treasury notes and bonds can be resold on the secondary market, which also means that prices can fluctuate further. In fact, Treasuries reached record high demand levels on June 1st, 2012. That's when the 10-year Treasuries yield dropped to 1.442%, the lowest level in more than 200 years. Investors fled to ultra-safe Treasuries in response to the Eurozone debt crisis. The interest rate on U.S. Treasury bonds and notes are paid every 6 months and does not change throughout the term. If you hold on to them until term, you will get back the face value plus the interest that was paid over the life of the bond, no matter what you paid for them at auction. The minimum investment amount is $1,000. The interest rate paid should not be confused with the Treasury yield. This is the total return over the life of the bond. And since Treasuries are sold at auction, Treasury yields change every week and do have fees if bought through a broker. Here's how it works. If demand is low, notes are sold below face value, which is similar to getting them on sale. Therefore, the yield is high. The buyers get more for their money. But when demand is high, they are sold at auction above face value and the yield is low. The buyers had to pay more for the same interest rate, so they get less for their money. The other difference between these and the T-bills in the low risk category above is the length until maturity. T-bills are issued for terms of less than a year. Treasury notes are issued in terms of 2, 3, 5, and 10 years, and Treasury bonds are issued in terms of 30 years. In terms of returns, they range between 0% for 3 months for a 3-month bond to 2.83% for a 30-year bond, which would return $51,415 in 1 year and $57,486 in 5 years. And that income is only taxed at the federal level. Starting on our next video, we'll get into moderate risk investments, which, as the old saying goes, more risk, more reward. If you would like to see how getting involved in real estate can benefit you or get some great educational information, drop us a line. We want to hear from you. Our contact information can be found on our website at www.simpleacquisitions.com. Now is a great time to invest in real estate. Don't delay in making your money work harder for you. Remember, real estate doesn't have to be complicated. With Simple Acquisitions, it's smart, secured, and simple. I'd like to thank everyone for joining me today, and I hope to hear from you all real soon.